Hey everybody, JC Peretz here, founder of allstarcharts.com, and I am joined as always with my main man, Mr. Shawnee McLaughlin. What's up, Sean?
Hey, my man, there was a lot of people talking about you last night at my meetup in Boulder. You could thank Ian Rosen for that.
Oh, I hope they had nice things to say. I don't know if all of them did.
Well, I had to publicly shame one of the attendees at the thing. He was talking about how there's only 5 stocks moving this market higher, and I said, "Wait a second, no. You got to talk to my boy JC. He's got a whole different story for you that's gonna rock your world."
Well, I'm old school. I like to count, Sean. I like to count. I was actually teaching my daughter how to count the other day. We were harvesting some cherry tomatoes and we put them down, and she's like, and we start counting. She's like, Daddy, can we count? And I'm like, hell yeah, let's count. And we started counting. It was lovely. You know what's really funny, Sean? Everybody's talking about Bitcoin, crypto, laser eyes are back. We're making money in the Mara here internally, so we're thrilled about it, obviously. And nevertheless, guess what we're talking about today? Give it to me.
We are going to talk bonds. Yes, sexy,
Oh,
sexy bonds.
dude, when Sean talks to me about bonds, it warms my heart. It really warms my heart, Sean. You
Well, look,
know,
we were talking this morning during our little jam session internally, and we were saying, let's find some ugly charts. Give us some messy charts that just are directionless and frustrating bulls and bears alike. And we had a few candidates that we
can we
liked,
talk
but
about why we were doing that? Explain to the folks why we're looking for really boring charts specifically and why we're doing that in this particular environment.
we're looking for boring charts and sideways consolidations because right now the options market is offering us a great opportunity to get into some leveraged bets very cheaply. And when you could put yourself in a position in an instrument or a stock that might be setting up for a big move and we just don't know which direction, well, we could still profit from that too by using what's called a option straddle or an option strangle. And really quickly, what that means is you're buying an equal amount of calls and puts in the same expiration, and you're betting on a range expansion going one way or the other. You don't care, but you're going to benefit from that move directionally, but you'll also theoretically benefit from a rise in volatility as the instrument gets a little bit more volatile coming out of its sleepy state that we were looking for. So that's why we were looking for stocks or ETFs that are kind of going sideways for a while, frustrating everybody, which is the perfect environment to
And
get
then
positioned for a
also,
breakout.
also, also, Sean, as a complement to the other stuff that we've been doing, like explain, there's additional portfolio considerations.
Right. So during our meeting, I was also talking about how I was kind of keeping an eye out for some stocks I might want to get short. Not because I'm bearish by any means, but just because I was looking at all the positions I have in my portfolio right now, and every one of them is a long biased position, which is fine. I mean, this is the environment to be long in, right? We've been in a bull market. You should be long, and I am long. But I was like, I liked in my perfect world, and my perfect world never exists, JC, but in my perfect world, if I could dream it up, I would have 10 long positions on, 10 short positions on, and 5 or 6 delta neutral positions on. Like that would be my dream portfolio, but it never works out that way, but I can always try. So I'm always
Well,
looking for some kind
how
of
many
balance.
environments actually would merit such things?
Well, the last time that I could really remember a perfect environment for that was the summer of 2015, I believe it was.
I can't believe you just said that. I had the exact same environment in my head. Oh my God. You're
Yeah.
so right, dude. You're so right.
It was the summer of 2015. I was making a lot of money selling premium and S&P index options, so
What
that's
a
why I
mess
remember it.
that
That's why it
thing
sticks out.
was. Oh, that thing was such a mess.
And
Yep.
then China messed it all up. Remember China, like the China stock market had a little like 20% crash in like 3 days, and that messed everything up.
That's when I was moving to California. It was good times, man. We were super bearish. It was good times. All right. Anyway, back to the trade. Why? So the point is, we're looking for messy charts for a variety of reasons, for portfolio diversification, sort of direct. We have a lot more directional stuff going on. We've got stuff that doesn't expire until the end of the year or January and stuff like that. So we got some time on those things. So we got plenty of exposure there. So when Sean started talking more delta neutral, that sort of got my attention. That makes a lot more sense to me. In terms of what we were trying to put on, we were looking at Cameco, remember? We were
Yep.
looking at CCJ, which was one of the ones. Actually, I have the chart here. CCJ was definitely one of the ones that we were interested in, but they were super expensive, right?
Right. We were looking at CCJ would have had to make like a 25% move for us to be in a reasonable position to make a good profit, but that's just seemed like a stretch. I mean, I know that stock can move for sure if it gets some momentum, but I felt like a stretch.
And what was the other one? There was CCJ. There was another one that we were looking at that was also pretty expensive, just didn't make sense. When we started talking about treasury bonds, I'm like, man, you want to talk about boring? Once interest rates peaked in October, even late September, you can even argue it's just been a mess ever since. So I'd love to hear sort of your thoughts as to why Sean McLaughlin, the last person that talks to me about bonds, the person that sits in our meetings and God bless you, just sits there with his mouth shut and a smile on his face and lets me and Straza and Ian debate about credit spreads and bonds till our little heart's desire, right? And Sean, you're just talking about bonds. What are we doing in the bond market? Give me the trade. Give me the trade. This is new. I don't know what we're putting on, so this is news to me. I knew it was bonds because you slipped earlier, but I don't know the exact trade. So talk to me about the trade.
So usually when options premiums are incredibly cheap or relatively cheap like they are now, I like to go as far out in time as I can. I didn't necessarily do that in this case, JC. Instead, I went to September options and I bought a straddle. I bought the at the money straddle in the 103 strike. That's right around where TLT was trading when I put the trade on. I bought the September 103 calls and the 103 puts, and that trade cost me $625 is what I paid for it. Still trading around there right now, I believe. And I chose September because that premium, that cost of $6 to me corresponded pretty well more with the upside target than the downside target. Not that these are targets. The chart that you're sharing on your screen now, those are not targets. Those are just identifying the range. But
levels of interest, as our friend Brian Shannon likes to say, levels of interest.
All right. So with TLT trading at 103 and me paying $6-ish to buy the spread, that means at expiration, TLT would have to be above 109 for this to pay. So that corresponded really well with that upper level of interest. The lower level of interest is 99, which is actually closer. So that premium of $6 felt right. Like I could have gone into January, but it would have cost me more. It would have cost me about $9 or $10. Not that that's a bad trade, but I don't know, JC. Maybe I'm just a little impatient, and I'm looking at this chart thinking that this move, if it's going to happen, it's going to happen soon, and the sooner options will get a little bit more juice quicker. So that's why I chose September options, the 103 calls and puts. We paid $625 for them, and this is a little bit different, JC. This is another. Here's where I'm going to surprise you. You like to be surprised. I'm putting this trade on with a profit target on a straddle. I don't usually do a profit target on a long straddle. I usually like to let them ride, let them do their thing, right? Go wherever they go. Because look, for us to lose 100% of our premium paid on a straddle, two things are going to happen. Number one, I'm going to have to hold it all the way to expiration. I very rarely do that, especially in a trade that's losing. Number two, TLT would have to close right at 103 exactly on September 15th, which is an expiration day. And if it did that, then I would lose all of my premium pay. The likelihood of that happening is so remote. So it's not like we're going to lose 100% of this trade if we're wrong, but I still will take my loss and get out of the trade if the spread, the value of the spread loses 50%. So if it's trading at like $3, a month down the road, I'm going to cut it. I'm out. Also, if it doubles in value, I'm going to take my profit, JC. I don't usually do that, but I'm going to, if it gets up to about $12.50 for the spread, I'm going to sell it and I'm going to walk away, wipe my hands of it, take the profit.
I don't like
it. Very happy.
I don't like it.
But I did throw a caveat in there, JC, and I did say that I will, in the case that TLT does break out soon, basically like in the next 30 days, like if it happens quick, in that case, I'll be much more patient with this trade, and I will.
I don't like it
A little bit more.
I don't like it at all.
You don't have to like it, JC. It's my money.
No, I know. I mean, this is why we do this, but I'm not putting this trade on. I don't like it at all.
You don't like anything about it, or you don't like my management of it?
I don't. There's a lot of things I don't like. The only thing that I like is the idea of why we would want to put on such a trade. is the extent of my agreeing here. I think a 2-to-1 reward to risk ratio sucks. Although the probabilities are slightly on your side of success, right? But not much.
Yeah. I don't think of it as 2-to-1 though, only because for us to lose 100%, it's
right. Well, that's
impossible.
my point. Right. No, that's right. Well, fine. But you're accepting a 50% loss there. So you're in my head, it's gone.
Yeah.
I got to be cool with that. And all I'm getting is a double.
Well,
not for
if
me,
you think
Sean.
about it, if you think about the risk being that we're only going to risk 50% of the premium, then it's kind of a 4-to-1, right? You're risking 1 to make 4, if you think of it that way.
I don't like it. It's not for me. Listen, we don't have to agree on everything. Like, you have terrible taste in sports teams, for example. Like, we don't agree there. We don't have to agree on this.
That's surprising you say that, because you're a guy who likes to follow trends and winning, and your teams don't do that. So that's weird to me.
I'm sorry, but the Miami Heat, although, listen, kudos to Denver Nuggets this year, nothing but respect. But I mean, the Miami Heat have, arguably the best organization in all of the NBA. So we're accustomed to winning championships. It's something that we do. The Miami Dolphins, on the other hand, are putting in quite the bottoming pattern, right? Big base there for the Dolphins. You know what I'm saying? They're just breaking out.
It's been a 30-year pattern. I mean, they're due, that's for sure.
It's like Japan, right? The good things take time, right? Japan now getting going, new 33-year highs. Miami's got the most prolific offense in NFL history,
Is it almost football season? I can't wait.
Oh, I can't wait, Shawnee. I can't wait. All right, so let's give the folks one more time what we're buying. Sean's buying, right? Why don't you weigh in? Email us. Let us know what you think. Who do you think is right? Is JC right? Is Sean right? And it's not so much like whether we make money or not. I'm more interested in the thought process of, would you be willing to put a trade like this on, and because you agree with Sean's thought process, who I respect tremendously, obviously, or do you agree with me that it's just not worth it, right? The juice ain't worth the squeeze, right? That's how I look at it. So that's how I look at it. So buying the TLT September 103 straddle for approximately 6.25. That means we're long both the 103 calls and an equal amount of the 103 puts. This is in September. Again, for TLT, the debit that we pay is the most that we could lose, of course, even though Sean laid out the risk management strategy there. And then as soon as the thing doubles, Sean wants to sell it. Listen, I respect the plan. I respect the man. It's just that the trade's just not for me. I like that you have a process. I like that you know where you're going to be out if you're wrong, and know where you're going to be out if you're right. Like, that's all that really matters. And kudos to you. I like it. That I like.
Well, let's see what plays out. Maybe we'll revisit this down the road and see how it went.
Dude, you're totally going to make money on this, and I'm just not. So, and that we know how this is going to work out. We know how this is going to work out. So, as always, I'm JC Peretz. This is my man, Sean McLaughlin. Let us know what you think. Adios.
See you, everybody.